So, welcome to another Florida home buyers podcast with Brent and Lee. Brent's got his jacket on tonight because it's freezing cold outside. It's going to snow. He doesn't have any Halloween though. Where's your
Nothing.
Halloween pumpkin?
No lit pumpkin in the background.
I want to see a pumpkin in your background.
Work on me.
All right. So, welcome tonight. Tonight we're going to talk about what you can do in buying a home with high interest rates, because it looks like we're going to have high interest rates for a while. And Brent's been in the mortgage business for almost 30 years, right, Brent?
Yeah, close to it. Yeah.
So he's seen it all. He had a big mortgage company, 40 agents in California for years. And so over there, 15 people live in a house back then, especially when. We're going to go through the rate environment, what's happening. Brent's going to talk to us a little bit about that. We'll give you some ideas on the market and how to navigate it. What I'm seeing on the market right now, boots on the ground. We're selling homes. We're buying homes. Working with buyers and sellers, coming into the state, moving around the state. So the market is starting to move around. The real estate market is selling and moving. So we'll talk to you a little bit about that, give you some ideas there, and let's get started. If you're listening from somewhere else, please drop it in the comment. We'd love to know where you're coming from. And also, don't forget to bring your questions to Brent and I. We love to answer them. And Brent, let's get started with rates, man.
Sounds good.
Where are we sitting today?
Well, I'll tell you what, today we had a hit in the bond market, some geopolitical activity over in the UK. Their year-over-year inflation came in over 10%. There was a little dip in August, and it went back up. So it's not looking good when you have month over month coming in higher and the year over year coming in higher, actually inflation accelerating. So inflation can spill over into other markets, right? And so that concerned this market. As soon as the bond market opened this morning, we saw, the bond market tank and we saw yields go up. In other words, interest rates going up first thing out of the chute this morning based on that information. We had housing starts and housing permits came in today as well at 8:30 this morning. But basically, one was higher than expected, one was a little lower, so pretty much a wash there. That wasn't really the news today. It was really overseas, and so that took the 10-year Treasury over 4%. We closed above 4%, and that's kind of a first. 2 solid days above 4%. That's a kind of a psychological ceiling, if you will, and treasuries don't impact mortgages directly. However, it's a sign. Usually, when we cut through a psychological ceiling like that, it's not looking good, So we were advising our clients closing the next 2 or 3 weeks to lock their loans and to even further out, if you don't have a tolerance for risk, to lock up those deals, because 2 solid days above that 4% figure could be another leg up, if you will, for interest rates.
Right. And so we're going to talk about that tonight, Brent, that, we talked a lot about interest rates, and, we get all of our information from being, doing our jobs, boots on the ground, you doing loans, me selling homes, and, but also we listen to a lot of really smart people, and
Right.
and I want everyone to know that the information we share with you every single week, the information I share with you on our videos that Brent shares with you, some of this information comes from some really, really smart people. We don't just come up with this in our head, or it's not just our thought pattern behind it, but we're going to share some of that with you today, because pretty much everybody in the industry was wrong. I'm going to come out with a video this week and talk a little bit more about that and how to navigate that. But to get started, let's show everyone what, predictions were December 2021, and we'll kind of break it all down from there.
Mhm.
And then we'll talk about how you can, navigate some of this. But this was a screen that we actually showed in one of our videos,
Right.
shows back in January of what we looked, what experts were saying. This is Freddie Mac, Fannie Mae, MBA, NAR, National Board, Association of Realtors, and their assessments of Q1, 2, 3, and 4 of this year. And as you guys can see, that no one thought we would even be at 4%.
Right.
So, and then when you look at February, the projections changed, right?
Mm-hmm.
At 4%. And then we had stuff like this coming out in March. The financial market mortgage rates are likely to plateau near current levels. And what were current levels? 5%.
Mm-hmm.
And now we're sitting where we are. So I think, this shows a good reference to where I don't think anybody at this point, Brent, knows what they're talking about.
Right. Well, the Fed is, constantly looking in the rearview mirror. Their data is, looking back. In other words, we're looking at inflation numbers from literally 2 months ago when we're making decisions as the Fed is making decisions on, quantitative, tightening and how much they want to increase, the federal funds rate. And so, they, in December, they were talking about, all this inflationary is transitory. In other words, basically it's, everyone printed a lot of money. And so we're just transferring into, hey, everything's more expensive, wages will go up, and it's not really a burden on the people. And is that slowly, the air started to slowly come out of the balloon. It just really, it really started to tumble. And what we saw, the bond falling, and on different legs. And, the bond, like, in other words, what I was just talking about, the 10-year treasury, it's been turned back. It peaked out in mid-June around the same level and then was turned back several times. And so it became a really critical ceiling. So my concern right now is like, my goodness, we can go into another leg, another leg
Right.
up as far as interest rates. And if that's the case, we need to, get that information out to individuals in the market right now. What's that mean to sellers? What does that mean to buyers, and the overall market, and how we might, proceed either selling or buying a home. What's our strategy and getting the best situation long term?
Yeah, and I don't think I don't want to think that the Fed would flat out lie to us. I think they misjudge the job markets.
Yeah.
Because that's what I think we're seeing right now is the job markets are so strong. And that's the biggest problem that I see the Fed having right now is how are they going to control this job market? I mean, they're tightening up, but so if you go to Walmart, you go to Target, by the way, you can get an Apple Watch right now from Walmart for $100 less than normal. It's like $200.
Wow.
So there's a lot of, there's a lot of, so if you go into Walmart and you go to Target, everything's on sale. Everything's on sale on Amazon. They're having a, Black Friday sales everywhere. They have a lot, we didn't have any inventory there for a long time. And now we have tons of inventory, except if you want creamer, you can't get creamer at Publix. What is that?
I don't know.
I don't understand. Like, they never have my Cold Stone creamer at Publix. Lisa's always bringing me home vanilla, so it's not the same. It's the only thing I look forward to in the morning. I don't have sweets now.
We went to
my
oat
diet.
creamer.
I have my Cold Stone cream. It's kind of like ice cream. It's not. Just put it in my espresso. It's all I want in life.
Oh,
and
man.
then those little pumpkin Reese's peanut butter cups.
It's that time of year, right?
Oh, dude, man, they just like scream. You walk by, they're like yelling at you.
And
Take
your
a
Bluebell
bag
ice
home
cream.
and eat it all in 2 days. So that's another problem. But anyways, time of year. Yeah, right. But but so they've got all this inventory, but you go to the restaurants, like we're in Florida, obviously, we're a little bit different market than other places. But the restaurants are packed. People are out doing things on the weekends. Um, it's it you know so people still have a couple of dollars left in their pockets, even though and are willing to spend it.
Yeah.
But when you see the news and you see how the national news and things are really tightening up everywhere. And I imagine with this, the president was on today talking about opening up the federal the oil reserves again. They're going to release a bunch of oil, and they're fighting with Saudi Arabia for more oil. But it just got we got really cold up north. I mean, they're getting snow in some places, so
Well, I think
I
that's
think
some of the
that's really going to
danger.
put a pinch on people's budget.
Well, it's nothing compared to what Europe's going to see, right, this winter.
Right.
Germany and England. I mean, I think part of it, part of their inflation problem is transportation and cooling their homes. You know what I mean? It's just
Right.
reheating their homes rather. And as things start to cool down, the cost of heating has just gone through the roof, and they're
Right.
having riots in the streets over it. It's crazy.
Right. And their economy affects our economy. So
It does. It does.
So
When people don't have money for, for them imports, buying our goods and things slow down economically for them, it certainly impacts anything that we have as far as exports and, sale of our goods we're making and shipping. So, and when oil is becoming such a precious commodity and our supply that we've kind of had the policy of slowing our production here. And then the Saudis decrease their production by 2 million barrels a day. The prices are going to go up. There's no alternative. And so we're going to see, inflation continue to go higher. And so there's no amount of job, layoffs that could, kind of fix that issue. Right. And so,
right. And I think they're having a hard time because it seems like I was talking to a pretty smart guy the other day, someone I talked to, a business guy, and he believes that a lot of people have left the job market and started their own businesses over COVID. So
right.
a lot of the empty jobs we have out there, even at this low, with where are we at? 3.8% right now.
Right.
Right.
3.7.
I mean, that's just super low. And so he thinks that a lot of people have, over COVID started their own businesses. And so they're now running their own business from home, and they're not going to work, and they're never going to go to work because they're going to run their own business from home.
Yeah. They've left the official job market. We see cash businesses, frankly, it's very common, where there are no tax returns even. So,
and we saw a lot of our clients become truck drivers, things like that, where when the trucking industry was needing truckers. And so, those are, those are 1099 jobs.
Mm-hmm.
So I think that one of the problem that's going to be is the Fed is going to fight this uphill battle with the job market. And then, where you're seeing a lot of the job layoffs is in the tech industry, but man, a lot of these people are, can go get another job or again, go start a business on their own right from their bedrooms.
Mm-hmm.
So,
yeah. And we're seeing wage inflation too. I mean, because, you go drive down the street and the fast food restaurants are advertising how much they're paying per hour, and it's much higher than it was 2 years ago. Right.
Right.
I mean, so there's wage inflation as well. So, how much money did we create compared to other central banks? I think that's a big part of it. And, for the
well, as people's rent has gone up, one of the biggest problems they've had too is that employers are paying their employees more money so they can keep them. So they're giving them that extra money they need to pay their rent or their mortgage.
Right. Yeah.
So,
I mean, if you look at rents, Lee, I mean, what have you seen over the last 3 years? I mean, just the
Oh
thumbnail sketch
man.
where rate enter, where rentals were, where they were 6 months ago, and where are they now?
I mean, before COVID, I mean, let's just take Jupiter. I mean, Port St. Lucie for an example. I mean, you could easily find a place in Port St. Lucie for, 12, 14, 1600 a month. That's a single family home.
Right.
Jupiter, you could get a townhome for 1800 to 2500 a month.
Nice
Those
place.
numbers are way gone. I
Yeah.
mean, I was talking to a client of ours today who's got a home in Port St. Lucie. His interest rate's 2.5%. He's looking to buy um, he's looking to buy a home in Loxahatchee, and he knows his interest rate's going to go up. But I mean, he was telling me his mortgage is 1,600 a month. He could rent his house for 2,900, 2,900. I could have it rented in a week.
Right.
So so that's one of the things we're going to talk about is that's one of the reasons why I don't think we're going to see a real estate crash. We're going to talk about numbers and what's happening here. I want to bring this up real quick. Here's a smart guy that I listen to everything he says. Um, Jamie Dimon, he's been right since the beginning. He's called this pretty much since the very beginning. And now he says we're likely to tip into a recession in 6 to 9 months. And then he's the one saying that, hey, listen, it could be really, really bad or it could be light. But here's a guy who, is running JP Morgan's and is saying that, look, I have no idea what it's going to be like, but we're going to be in a recession.
Right.
So,
And we've already had 2 successive down quarters with GDP. And so, we just wrapped up the third quarter, for the year. And I think, the official agency calls that recession, but, as far as the economic slowdown, that's
right.
already in the books,
Right. And then here, this came out. We were talking about this today. Fed seen ramping up interest rates as inflation burns hot. So, the inflation numbers are still super high. So they're lifting rates to 4.75 to 5% by early next year, if not further.
Mm-hmm.
So they plan to keep going.
Yeah. It's another 1.25, 1.5 is already baked into the pie. I mean, that's what the mortgage market's already anticipating. And so what we're really watching is the 10-year treasury, kind of where's the bond market going to say enough's enough? We probably overcooked this thing. I think that's where the mortgage market is. It's a little different because the Fed funds rate does impact, directly, some installment loans, certainly HELOCs, equity lines of credit, credit cards, that type of thing. The mortgage market's really independent of it, but it's just a guide to follow, and that's a very key asset, the 10-year treasury to track as far as yields. And so, hopefully we can stay below that because, like I say, another leg up could bring mortgage rates up and around the 7.25 mark again. So
Right.
we're hovering right around 7 now.
Right.
The
So,
standard deal. Yeah.
right. So, if you go onto Zillow, you're going on to, Zillow, Redfin, any of the realtor.com, any of the sites out there, you're noticing price drops everywhere. Properties coming back on the market. That is an indication of the market starting to slide backwards. But I want everyone to know that a lot of that is overpricing.
Mm-hmm.
So a lot of people have overpriced their homes, but there are price drops beyond that. So, you're going to start seeing that. And so what we're seeing from our clients, so some of our clients where we're listing have said, hey, look, we're willing to drop 20,000, 30,000, but we're not going any further. So if we can't sell, we're just going to stay in our house. Mm-hmm. I think that's one of the things we're going to see a lot of over the next 6 to 12 months is mm-hmm. a lot of people are just going to stay in their house. So inventory is going up, but it's not going up near to the rate that it needs to go up, that we're going to see significant price drops, like 50%. You're not going to see
Mm-hmm.
that. You're not going to see 20%.
Right.
So I think, and I can't tell anyone what's going to happen. I think we're going to have a better idea of where the market's going to land come March, at the end of
Mm-hmm.
March, because we're going to go through the holiday season. We'll have a little bump in the real estate market right now. We're seeing it now. People coming back in the market, starting to buy. A lot of new construction selling right now. Again, Coulter and PGA Verano just released 18 new models. They're selling those. They had a really good month last month. Pulte at Heron Preserve and Tradition, they had a really good month. And then Cadence, they're still on generators, and they've sold over 15 homes in there, and they just opened up there. They haven't even had their grand opening. They were going to do it this weekend. Now it's gotten moved to November. So they're obviously, FPL's having a hard time because they're dealing with poor people over on the West Coast that we're still dealing with. And with that being said, I've talked to several agents now that said that they're getting calls from folks up north saying, hey, listen, if there's property for us to buy that needs to be, repaired, we're willing to buy it if we can get a deal
Right.
on it. People are actually trying to buy in the hurricane-stricken
Right.
parts of Florida.
I'm getting calls like that too, Lee.
Are you?
Yep. Yeah, because people are thinking, hey, they still want to buy. That hasn't changed. They still want to buy, and they still want to buy in Florida. And they're saying, hey, are there deals or something I could, swoop up and, fix up, so.
Right. So I think you're going to see, people taking their homes off the market. And we're seeing that now already. And they're just staying because they're not going to sell because they have such a low interest rate. And they're like, you know what, we'll just stay. We're not going to do it. And then you're going to see people that need to sell that are maybe moving to another area that are sitting on 2.5%, 3%, 3.5% interest rates say, you know what, we'll just keep our house, maybe take some money out of it to put down on another house and take a small second on it or something. And I don't know if you're seeing any of that yet, but I think that's going to happen.
No,
Buy another house with it, rent that house, and keep it.
Right.
And that's going to help with the rental market because we definitely need people to rent. We need more rentals.
Right.
But that's going to slow down inventory more. And then I think eventually we're going to, these builders are going to pull back on what they're building because they're not going to take a hit on stuff. I mean, I have a client right now that Mattamy Homes is now working with, on the third month. I'm trying to put a deal to, get the house sold. 3 months, 4 months, well, I guess 4 or 5 months ago, they would have just taken it as deposit and been done with it. He's trying to sell a property and so they're working with him on selling that property. So that hasn't happened. We haven't seen that. You saw where they dropped the rate a point lower. One of the builders to keep the business. So builders are getting super aggressive and they're trying to, and so they're going to start pulling back if they can't sell homes.
What's the Cadence price point again, Lee, on that?
It starts in the high threes and goes, you can get a 3,000 square foot home for 600.
Right. And I think, they don't like to reduce prices, but they're putting that an attractive price to generate some activity now. And
right. Well, Cadence is a really, you get a really nice home for like totally tricked out 2,000 square foot for like 400,000. So almost 2,000 square foot. And that's impact glass. They're building concrete block all the way up now, where a lot of the builders were building stick on the top in Port St. Lucie, and they were building
CBS
concrete on the bottom. Now they're just building concrete block all the way to the top now.
Yeah.
So and still keeping prices down.
Right.
So those are things that I think. So, and then speaking with appraisers that I've done business with in the past and that I just did business with. So, a couple of things. Again, we'll say this, and if you're looking to sell, I think, I would, say, hey, this is the lowest price we'll take, and go ahead and take, mark your home down to where you believe, this is what the lowest will take, and take it. If you're buying, I mean, at this point, ask for everything. I mean, it's okay to throw a low ball in now.
Oh yeah.
You're the only, I haven't had multiple offer situation in a while. It's been months. So
We're coming off like a season where we literally had 8 to 10 offers the first 2 days on a property. And I think, relatively speaking, that's kind of normal where we're at now, frankly.
Right.
But, if you look at the
I
last
think,
25,
sellers are going to see more and more of people, coming in, 60, 70, 80, $100,000 less than what, on a normal, I'm talking, anywhere between 500 $1 million, you're going to see $50,000 to $100,000 lower than, and they're going to look at what they're going to have real estate agents that are, looking at the appraisals in there, hey, is this guy like this seller way overpriced? What did they buy the house for? That's another thing they're going to look at,
right.
How much equity they have. So, I would say that if I'm buying right now, and this is what I'm telling my clients, I would look at, what the house sold for a year ago, last year, December, what the comps were in there. And that would be my offer.
That's about where it's probably at.
Because I think we're going to lose at least 5 to 10%.
Yeah.
Because
the
people
first
just can't.
6 months of 2022, prices were just screaming up. That's in our neighborhood, in our area. Yeah.
Right. Well, something's got to give. Rates have got to give, or prices have to give.
Right.
One of them has to give, because everybody's not a cash buyer. Right now, we're dealing with a bunch of cash buyers, but that's going to change as this year, next year, and people have to get mortgages. And the estimates are still 300,000 people a year moving to Florida up to 2025.
There aren't enough doors.
Company and they're taking those numbers from the numbers of from the past of what people have moved here from retirement, and then adding the numbers to, hey, Citadel's here now, Goldman Sachs is here, Blackstone is here, BlackRock is here. You have companies tech companies that have moved into the area. Amazon has moved,
large distribution
companies are moving in. We have aeronautical companies moving into Florida. These companies are moving in here. Right. So that's not going to stop. And I think I think that people that if they can move and reduce their total cost from the state they're in, they're going to move, and they can get a job here, they're going to move here. Yeah. And there's jobs in Florida still. And we have we're sitting at 2.7% total, like I think 2.8%.
Yeah, it's 2.7%. I mean, there is no unemployment essentially. There's jobs here. Yeah.
And there's jobs still available
because of the growth. Right.
So Florida, everybody listening, Florida's a little insulated, and it's going to continue to be that way for a while.
I encourage people. Yeah. I mean, if you're looking at purchasing a home and you're waiting, I mean, I would understand why, but I think you need to consider, if you're going to move to Florida, what are the alternatives, renting versus owning, and what's the market going to look like, 3 years from now. Don't be short-sighted when it comes to real estate. It's a long-term investment. It's not like buying a stock. It's your home. So buying in a safe neighborhood, and then you can always refinance. But I think that there's just not enough doors. There aren't enough rooftops out there to house, the number of people that are moving here, which just increases demand. And that, and of course the supplies, is what it is. And so prices, we're certainly, like you said, like good wordly, more insulated here because of that.
We are. I don't see the market taking more than 10% hit.
No. Mm-mm.
I mean,
And I
some
don't see,
places might in
and I
Florida.
see, yeah, I mean, a year and a half from now, rates, like I say, I always tell people this, rates definitely went up much faster than they're going to go down. It's going to take a year and a half for rates to go back down, you know what I mean, to something more palatable. But I think what's going to happen when that does invariably happen, when the recession does kick in and rates start to cool a little bit, you're going to see, it gets in people's minds, 7 plus is an interest rate. When they drop back and down to the high fives, it's like everything's on sale again.
Yeah, and I mean, when you look at different markets, I mean, there's markets on the West Coast that I think could take a bigger hit. There are markets. I'm anxious. I'm skeptical of the new communities out in Loxahatchee. Because of the traffic situation out there, I think people are going to start realizing that the traffic is a lot worse than they thought it was going to be. There's hundreds of homes out there that are under construction right now that people haven't moved into. There's only a couple of ways in and out. So you have Okeechobee, Southern, and North Lake, and Okeechobee Southern are ridiculously traffic areas since, I don't know, for the last 20 years.
Yeah.
And North Lake Boulevard is only 2 lanes. And that's if you want to come out of Loxahatchee from the north side, you're going to take North Lake. And if you're going to come out on the south side, you're going to either take Okeechobee or Southern. But no matter what, if you want to go out to dinner, there's small restaurants and, places to go by. But if you want to go somewhere and go shopping and go out, you're 45 minutes away. I mean, Wellington would be the closest place. That'd be 20 to 30 minutes. So to get to the Wellington Mall.
Yeah, Lee, when you're talking about those commutes too, it's like that's all relative too. I mean, I lived in California for 23 years. If someone had told me I could be at work in 45 minutes, I would have done handsprings. I'd been so excited.
Well, I don't think it's so much the work thing. I think it's more of the, hey, let's go to dinner.
Right.
And I got to drive 30 minutes. Yeah, we'll need you to stay at home. Right. I mean, if I had to drive 30 minutes to go to dinner, I wouldn't go.
Right. I know what you mean. Yeah, you'd want to go to
one of those things you have to take into consideration. Some people are okay with it. I have a lot of friends in the farms, and even Jupiter Farms, like I have a lot, they tend to not go out as much.
Right.
Because it's 15 minutes to get to town. It's 15 minutes to get to town, right?
Right.
So those are markets that, might take a little, you might see a little bit more drop. And this is if we don't see rates go to 12%.
Right.
I don't even know what would be. I don't even know what we're going to see if something like that happens.
Well, the Fed's jawboning, hey, we're going to keep going until, and unemployment goes up, which I think is a strange thing to say. I think, production needs to increase, always, be more productive, but also the, just getting the inflation under control. I mean, they want to get back down to 2. I don't think you raise rates until it gets down to 2, because that's kind of in the rearview mirror, policy that they have. The PCE, the next couple of weeks will really be important because PCE is coming back out. That's a big inflation indicator. We've got another GDP figure coming out. So I think there's a couple things we're going to see in the next 2 weeks that really give us some idea of what we can expect in the next 2 Fed meetings, the remaining meetings this year.
So Sam brings up a point with the insurance companies, and this is something that's got to be taken care of. This is the biggest problem we have in Florida right now.
It is.
And the hurricanes on the West Coast has made it worse. So we're going to probably end up losing more insurance companies from that. So, there's ideas the legislature and the governor have, but that has to go through the courts too, a lot of this stuff. So there's ideas like, hey, let's make the roof of your home like your car. So if your roof's 10 years old, it gets blown off or you need it replaced, you're going to get a 10-year, you're going to get the price of a 10-year roof. They're talking about making Citizens Insurance just wind. That's it. That's all they cover is wind, and the other insurance companies will cover everything else. That'll bring more insurance companies into Florida because they don't have to worry about the wind situation. The other idea that they're talking about is insurance companies that sell insurance. It used to be this way. I'm not sure which governor changed it. I think it was Bush. I'm not sure. If you know, tell me. But but they changed the law where State Farm and Nationwide could just sell insurance to for your car, but they didn't have to cover your home. They're talking about changing that back. So if State Farm wants to stay in Florida, they got to cover houses.
Right.
So they, and then obviously we've got to make the changes where hurricanes are hitting on the West Coast. We got to, they're talking about putting up seawalls and barrier islands, and because the biggest problem we've seen here is flooding, and so many of these people did not have flood insurance because it's really unaffordable on that side of the coast. So that's a big problem, but it won't affect your mortgage as much as it will affect of where you're going to live in Florida, and also what your payment will be, because your insurance goes into your payment automatically. And so let's say you have a home, it's wood frame, you have no hurricane protection on it, and you have a 15-year roof, you're going to be looking at probably $4,000 a year for insurance, maybe just a little more. If it's one of these new homes we're talking about with impact glass, concrete block, roof's brand new on it, anything under 5 years old, you're going to get the best insurance. You're looking at right around $2,400 a year there. So I hope that answers your question, but it's not going to affect mortgages. And obviously we've been getting pounded by hurricanes. I've been here 30 years and 35 years, and we've been getting pounded by hurricanes, and people just keep moving here. My husband and I are moving to Port St. Lucie from Boca this spring. Do you think it will be a better time to buy? I think it's an unbelievable time to buy right now. So I don't think it's going to change. So my opinion is we're in this for 3 years minimum. Nothing changes with inflation till we get more oil and gas going. That's my opinion. I'm just going to say it.
I think
most of our inflation is connected to oil and gas, because obviously we have truck drivers that are clients of ours. One of them told us the other day his gas bill was $3,000 a week, and now it's $7,000. So I getting a list of spam here, man. I hate this. Anyways. So I think so if you're moving to Port St. Lucie from Boca, I mean, there's the builders. I think there's, it might, if rates are better, then it's going to be, the market's going to heat back up. If we get to 5%, it's my opinion. If we get anywhere in the fives, we're off to the races again.
That'll seem low. A lot of it's relative. I mean, I've seen, rates used to go up, a quarter at a time over maybe 4 months. I mean, this is highly irregular for interest rates to more than double in a 6-8 month period. So I think that you're rightly, I think once I said earlier in this, this show, that when we see, anything get back in the fives, everything's on sale again, because relatively speaking, the prices will seem low. And you got to think about what are people's options. I mean, if you're not buying, then you're renting. And if you're renting, what are your options there? And those aren't as attractive. You know what I mean? If you're looking at the long haul. So, I mean, every situation's case by
Yeah,
case.
but
So,
I mean, look, I mean, let's be completely honest. All right, my son made $90,000 last year,
right,
and he can't afford to buy a house in Orlando.
right. He lives in a nice area, but you're right. He's limited to what townhomes in the immediate area he's in, right?
Right. And even like, and he just can't, even if he went to Kissimmee, which is, he's in Winter Garden. If he went to Kissimmee, he's not really saving that much money. And a lot of the builders up there are Ryan Homes and Lennar, and I don't want him to buy Ryan or Lennar in new construction. So everybody know I don't like Ryan and I don't like Lennar Homes.
I know.
I
Not a
mean,
fan either.
because they have tons of problems. I can't tell you how many of them I've walked in 3 years later, and they have a crack right down the middle of the living room from the tile because the foundation's cracking. Plus, they have terrible reviews on customer service, and they're in multiple lawsuits. So, so Sam, yeah, I don't know, Sam. I mean, obviously mortgage, like we said, insurance cost is baked into the payment, and so if the insurance gets too high, yes, it's going to affect the prices on the
Yeah.
west, and you're going to see most of this on the West Coast,
Yeah.
where,
And the
you
DTI is
already
going
have,
up.
because where you already have problems with flood insurance over there, because it's
Yeah.
not wind they have a problem with as much as it is flood,
Hmm.
because it
Yeah.
just goes like
If
crazy.
insurance costs go up, how it impacts a mortgage is your debt to income ratio goes up because that's computed in it. So the amount you'd qualify would go down. And so, yeah, so that, but I don't think we're there yet where we're really fully pressed against, the affordability thing. It is becoming an issue. It's a very good point you bring up, Sam. I do think that, there insurance costs, we're not seeing them skyrocket right now. They're pretty stable still, even after the hurricane. So,
I think the good news is that the legislature lives in all these areas that got hit by the hurricane,
right.
and they're going to come back into and they're going to really focus on this. I think we'll have a solution for it next year. I really do.
I do too.
I think it's too big of a problem now, and we've handled our so we had two huge problems in Florida. One was the red tide, the other was our insurance. We've got the red tide under control now. Everybody's working together on that one.
Right.
Brian Mast got that passed through Congress, got a bill passed through it. They're keeping the water levels of Lake Okeechobee. You've got federal laws now protecting the environment with the sugarcane farmers. So that's handled. That was a problem created by the sugarcane farmers, and it's being handled. This insurance issue is a problem that has been, and I understand people are trying to make money, but my client has a 4-year roof. They was taught they were the insurance the roofing company had the insurance company paying for a brand new roof for just a small leak. And I looked at my client and I said, if you sell the house and hear what I'm saying to you, people, if you're listening, you're buying. If there has been a claim on that roof, and it's going to carry over to the new buyer.
Mm-hmm.
The insurance will. So they look for
claim.
claims. So that has been the biggest problem with the insurance, is the roofing companies, and then the roofing company, and then the insurance companies not wanting to replace the whole roof, and then going to court and fighting with the insurance company, and the insurance companies have to fight with the client.
Right.
And I'm not there. I don't know who's right or wrong. I've not been in that situation, but I do know that across the board, if you listen to the news, and it doesn't matter if they're on the right or the left of the situation, they are blaming the roofing companies, and
Right.
and the fact that these insurance companies have just gone out of business. It's not like they're saying, hey, we don't want to put the roof on your house. they go out, they're going out of business, they're going bankrupt.
Financially, yeah, right.
Financially, and they're leaving Florida because they're bankrupt. So it whatever the situation caused that to happen, they have to go. And we also need larger insurance companies that can handle it. So
I've seen some firsthand situations where, a few tiles were blown off and they got a whole new roof. And it's like, it's kind of like, I knew someone was fighting down the street from our home for 3 years. And the next thing you know, they've had, home improvement companies. They've had plumbers. They've got their whole house has been remodeled on their settlement, for, something they fought. And so it gets to the point where it's cost prohibitive for insurance companies. So there's a financial element. They have to, have an incentive to come here too,
right.
So I think that's the best solution, Lee, that I think has been offered up is, to really prorate, hey, how much life is left in that roof. If we want to replace a roof that, we don't replace the whole thing. So
Right.
personal opinion on it. Yeah. Something that's more equitable for the insurance companies. So, it's equitable for the people. And Lee, I've seen and heard, actually, I've heard clients of yours, you walked them out of a home as soon as you saw the roof. So having a good realtor that really can see, and understands construction, the year of the roof and what that might mean down the road, and having a solid understanding of that for insurance costs and what you can anticipate, if you need to put a new roof on, the estimate of a cost, and kind of build that into your equation when when you're considering a home.
Yeah. So rent, let's just go through this. Okay. Yes, rent in Boca is insane. Rent in Palm Beach County is insane, period.
Yeah.
Rent in Port St. Lucie is ridiculous. I mean, it's like what you're paying for this rent. Cooper, the Cooper Creek area, is that Lennar you're talking about out there? That's a quick question. GL's great builder. And I'm more than positive that their list is going to be gone now. So you won't have to bid on a house, hopefully.
The waiting list, yeah.
Right. So yeah. So if you are buying in an area that you are buying a Ryan or Lennar home, just do a good inspection on it, and make sure you have a really good inspector, and just dig into it, because they all you have to do is go to Consumer Reports, folks, and check it out. And Lennar and Ryan Homes have major issues with lawsuits. So yeah, it is. He said his thinking. It is. It's Lennar out there.
Yeah.
I've never sold a home out there because it's a beautiful community, and they have the 1/4 acre lots, and they have nice homes out there. Again, though, it's going. You're dealing with Lennar. By spring, though, guys, you're going to have a lot of opportunities. So Mattamy Homes is building a new community. You've got new communities with Taylor Morrison's got their new community off of Becker. If you want a little bit more land, 2023, they're starting Mattamy starting their new community in they're starting their new town in Martin County. They're actually, it's happening right now. They're going to be selling by the end of 2023.
Right.
Newfield, which Mattamy builds a great home. Coulter, by the way, 18 new models and affordable models in PGA Verano. HOA is a little high in there, but it's a resort, man. I mean, there's tons of kids in there, and if you play golf, you're right next to the golf course, and it's affordable. It's like, it's a lot less than it is around here. I mean, I think it's like $20,000 a year, $20,000 now. They used to be like 6,000, like, and then 1,600, and like you could get like, so it's one of those things that there's going to be a lot of new communities are coming up, a lot of opportunities coming up. And the nice thing about Martin County compared to Palm Beach County or St. Lucie County is that the taxes are way less. the property tax.
Mm-hmm.
By a lot.
Right. Right.
So yeah, do your research on that. Love PGA Verano. Yeah.
Mm-hmm.
Talk to Kent today. They're tweaking up the models, and we're gonna do a nice, really cool overview of the community and all the new models, and we're gonna do that in the next couple of weeks here, 2 or 3 weeks, whenever they finish getting all their models together. So yeah, and then if you like PGA Verano, you're gonna like Kinley. They're building Kinley right there in Tradition. That's going to be a kind of a upscale community, a lot like PGA Verano. Matamy's seen what's happened over there. They're like, hey, we got to do this thing. So more of a upper scale, home starting probably in the fives and going into the millions. That's what their plan was. I don't know what they'll be now, but Matamy can do whatever they want because they own the land.
Yeah.
So
Jenny's jumping in again, Lee.
Well, what is she saying here?
If you want Lee to find you the best deal, bring the man some creamer.
I know. Creamer, man.
What's your brand?
I like that. Well, I'm, my coffee thing. I'm thinking about stopping drinking coffee in the morning because it's putting me to sleep. But but it's the what is it? The international. What is it? The international coffee, like it's a fake creamer.
Oh,
it's really the only thing I drink like that now. I was just, when we were on the keto diet together, I was just drinking straight cream in the morning in my coffee and putting the erythritol in.
The fat, you can have it. Yeah. Cold Stone.
Cold Stone. Yeah.
Cold Stone. Thank you, Jenny.
Where other builders are looking to push more into the center of Florida, further from the coast from Osceola. Yeah. I think the next market's probably going to be Indiantown.
Yeah.
Before all this craziness started happening, Indiantown was becoming a market where you were no, Jenny, it's Cold Stone, not Gold
Stone. Yeah.
So Indiantown was becoming a very hot market for investment real estate. So people are buying land. Oh yeah, I like Bulletproof coffee too, Sam.
Oh yeah.
No, yeah, man. It's good stuff. Coffee puts me to sleep.
We just figured that out.
I've been really, really tired. I've been working out really hard.
Yeah.
And I've been really, really tired in the morning. And I've been getting up earlier. I got up at 4:30 this morning. I felt great. I was like, gosh, I'm going to go to the gym at 5, right? And my dog, Henry, wasn't even up yet. I mean, everybody was still sleeping. I'm like, this is great. I'd make a triple espresso. And I start to walk out the door and I can just feel, and I had to go back to bed, slept for 2 hours. So yeah. I think I'm a little ADHD.
That's what it is.
I know I am. I've been ADHD for a long time, but for some reason here recently, the coffee's starting to affect me worse than it did before. So that's my story on coffee. I love coffee though.
Yeah, me too.
I love espresso. Nothing's better than a cafe con leche.
Oh yeah.
Love it. Love to go to, we have a really great little Cuban place here in Jupiter.
Yeah, I got to say the Cuban coffee is
it's so good, man.
Once you get turned on to that, you don't drink the Americano.
Oh, it's so good. It's so good. It's so good. That's why I'm an espresso guy.
Coffee's different here, yeah.
What did she say? This is your wife.
No coffee for you. Multitask.
Gosh. Yeah. Well, that's it. I mean, anybody have any more questions? We appreciate you joining us again this week. We'll be back next Wednesday night with more. We'll try to make as good news as we can, right?
Yeah, right.
I mean, it is what it is. I mean, the market's what the market is. If you want to move, move. Rates are going to come back down. It's all about just keep staying in your budget. One thing I would say to people, don't live off your credit cards this Christmas season.
Right.
Try to keep that down, because as interest rates go up, you're going to get cracked on these credit cards. And I know a lot of people credit card debt's going up right now. And if you can't pay it off, don't put it on there. And I know that sucks, but we're doing the same thing. I mean, everybody's pulling back. I mean, we had a big vacation planned for February. We're probably not going to do it because, I don't know what the real estate market's going to do next year, and I want to keep cash in the bank.
Right.
And so, watch your budget right now, because what we're seeing right now, and then this is the thing that I find that freaks me out. And I had a great talk with a client today about it. And I know you and I have talked about it, Brent, and this is what Jamie Dimon's talking about. We've never seen the situation we're in right now.
Right.
We've never seen it happen. There's nothing to go back and say, hey, this happened, like when the 2008 crash happened, that was the same thing that caused the Great Depression. If you don't know, go do some research, look at your history. Bernanke did his thesis on the Great Depression, and that's why he went into the president and said, listen, we need to give the banks money. We can't not give them money. And I remember, Neil Cavuto, I love Cavuto. Many other market guys were like, look, we shouldn't be giving these banks money. We shouldn't do this. This guy knew for sure we'd have soup lines because we'd have a run on the banks. Right. And so they wanted 90% home ownership. That's what caused, and they deregulated the banks and the insurance companies, and the more banks and the Wall Street commingled money. And Siegel came in, they put in an act that stopped that, and he did a whole thing on it. And then that was removed by the president at the time. And so when that was removed, the banks, the insurance companies, and the Wall Street started commingling money, and the banks were selling all the bad paper to the Wall Street, and the Wall Street wouldn't take, the insurance companies took. And so the insurance companies were failing, Wall Street was failing, the banks were failing. And so they did who went out? What was the one that they let go? They let one. The big, what was the big brokerage they did? Everybody should have gone to jail, though. Nobody went to jail.
Yeah, the bond rating agencies, they're calling that stuff A paper.
And so Bernanke had done a paper on that, and he just went to the banks and said, everybody takes money. You all take it. You don't need it. I mean, because Washington Mutual hadn't done any really crazy loans, and they didn't need it. They were okay. And so he made everybody take money. And then the government was in their business, and they didn't like that. So they got out of it. And that's why they're still remembering that when we went through COVID, they were like, hey, we're not going to foreclose on people. We're going to work with them. Right. Because they foreclosed on the entire city of Port St. Lucie. And if you want to know why the taxes are so high there, that's why, because they had to rebuild their entire infrastructure. So that's not going to happen this time. But the problem is there's no way to go back and look except for, hey, when I was a kid, there were gas lines, there were, rates were through the roof, all of that stuff. You went through it too, Brent. You're older than me.
Oh, yeah.
So at least 10 years, I think.
At least 10 years, right?
Old in a goody two shoes.
That's it, man.
Don't do Halloween. I'm going to buy you guys a pumpkin. I'm going to carve it and make it scary and put lights in it and put it on your front porch.
My kids got a kick out of the goody two shoes. They all looked up where it came from. It comes from a book in like the 1700s or something.
Yeah.
About this little girl that had two shoes. She was excited she had two shoes, and they called her goody two shoes. Yeah.
Yeah. I didn't know that. You learn something every day, right? So anyway, so we don't know what's going to happen, though.
Yeah.
We have no idea. The smartest people in the world don't know what's going to happen right now. it's a new market every day. It's very volatile. So just, watch your pennies right now. And if you're buying, get a good real estate agent that's not afraid to throw a low ball offer in, and be
Right.
okay if it doesn't get accepted. Just move on
Right.
to the next one. I just got one right here. They're not going to take it. I can tell you right now, my client's not going to take it. And we threw a low ball offer in, and they're way beyond where we're going to be, because there's 7 houses on the same street.
Right.
So why would you pay more than what you feel like you should? A house is worth what somebody's willing to pay for it. Keep that in mind.
That's right.
So find an agent that's not afraid to throw a low ball offer in, and also not afraid to ask for things, because we just got some repairs done on a house here in Jupiter. I just got off the phone with the real estate agent. They're going to do the repairs for us on the post on the front of the house. So I asked, I didn't think they'd do it, and they did it. But look, a lot of these, especially if you're looking at houses and they're on the market 60, 80, 90 days, come hard.
Take a swing, right?
Ask for credits if you need it. Ask for buy downs. Ask for whatever. And they might, hey, listen, you might run into a situation like I did with my seller, where we dropped the price to the point that we're not going any lower, but we're a below appraisal. So you could do a credit, so if you needed a $5,000 or $10,000 credit, up the price, you come in, you say, ask for the credit, right? So let's use this example, 640, you ask for the 640, you ask for the credit, and then, they say no, they come back and, say, hey, look, maybe we'll do 10,000 over. And cause we're, if the house appraises, then you get your credit. But those are my tips.
That's a
Brent will
unique
tell
thing.
you that I am the credit king.
Yes.
Before COVID, Port St. Lucie, I got 100 houses that they got everyone I did in Port St. Lucie. I got a credit for them.
Right. And now,
you were
Lee,
VA, you love me, right, Ben?
Oh my gosh. One person got a small check at closing. Got their deposit back, literally nothing down. Lee, and that's a window that will eventually close too. That's a door that'll definitely close, because, the appraisals will come in for a while until they don't. Right.
Right.
So I think, there's a season for maybe the next 3 to 6 months where you're going to see those credits, those FHA loans, the 100% financing VAs and all that stuff, with no pushback, and I think that's a season that's
it's going to end. Absolutely.
It is going to end.
I honestly believe right now is a great time to get out there and try to buy a house. I don't know what, I don't know what the next few months are going to look like. And if you're okay with, if homes are sitting on the market over the holidays and you're okay with moving in the holidays, just keep going.
Right.
Because March is when we're going to find out what really is going to happen.
Yeah. And the next couple of weeks, as far as interest rates, it's going to be real telling. We'll stay close on the PCE reports and GDP and all that. So, and the jobs reports coming out too. So first week in November. So those are all big reports going to be coming out. We'll be sure to keep people apprised of what's going on there.
Right. All right. So let's end it now. Thanks for joining us. Appreciate it. We rambled a little bit, but hey, you guys are great. And, you guys he's a great, right there. Older, wiser, cute as a pumpkin. Look at that. He's a white. Anyways, thanks for joining us again this week. We'll be back next week. If you're watching this video after it's live, don't forget to give us a thumbs up. Don't forget to give us a thumbs up now. Also, if you have not subscribed to my channel, please don't forget to slap that subscribe button, ring that notification bell so you don't miss any of our real estate tips and tours, and leave a comment on what you think is going to happen with the real estate market as we move forward here, moving into 2023. We'd love to hear what you think, and we'll talk about it, so definitely leave a comment. Let us know what you think. Anything that we can do to help, any questions you have, leave a comment on those. We answer all of our comments, and be kind to each other because it's tough out there. And we'll see you next week.